February 28, 2026. As Operation Epic Fury launched, people like you and me were in shock, but the data tells a different story. While millions watched the first missiles on the news, something strange happened before the first spark, something fishy. On the decentralized betting platform, Polymarket, the activity was staggering. Over $529 million flooded into contracts tied to the exact timing of the strikes in the 24 hours leading up to the invasion. One account, notoriously dubbed Magami Man, netted roughly $430,000 by betting on the precise date. This same account later pulled in another $553,000 by wagering on the removal of Iran's supreme leader just moments before his death was confirmed. For some of these bets, chances were almost zero. Blockchain analysts at Bubble Maps identified clusters of new wallets, funded only days prior, that walked away with over $1.2 million in profit. It wasn't just crypto. Wall Street saw a $1.5 billion pre-positioning in S&P 500 futures. In Israel, an Air Force Reserve major was eventually indicted for passing classified strike details to a civilian accomplice who used the info to trade. In the US, the February 28th data became the primary evidence for lawmakers pushing the Stop War Profiteering Act. As Nobel Prize-winning economist Paul Krugman put it, exploiting national security secrets for profit has a specific name: treason. 6:49 a.m. Monday, March 23, 2026. The market is quiet, almost too quiet. There are no breaking headlines, no Federal Reserve announcements, no major economic data releases. It is just another slow pre-market morning where traders casually watch their screens, sip coffee, and wait for the day to begin. Oil markets are barely moving, and everything feels predictable. Nothing suggests that billions of dollars are about to shift in seconds. And then, in just 1 minute, something completely unexpected happens. Over 6,200 oil futures contracts suddenly flood the market at once, covering both Brent crude and West Texas Intermediate. The total value of these trades is roughly $580 million, executed within a 60-second window. To understand how unusual this is, the average volume for that exact time over previous days was around 700 contracts. This is nearly 9 times higher, and it doesn't look random. It looks intentional, aggressive, and perfectly timed. Then comes the moment that changes everything. Just 15 minutes later, Donald Trump posts a message about Iran, talking about productive conversations, which is a complete reversal from earlier threats. Instantly, the market reacts. Oil prices drop sharply, stocks surge, and the Dow Jones jumps more than 1,000 points. Whoever placed that trade moments earlier just made an enormous profit in under 15 minutes. No hesitation, no uncertainty, just perfect timing. And this is where the real story begins. This was not a one-time event. Trump had spent the days before April 7th warning that a whole civilization will die if Iran didn't comply with American demands. The public rhetoric pointed one way: escalation. Markets were on edge. Oil was elevated. Then, in the hours before, President Trump announced a 2-week ceasefire with Iran, an announcement that sent oil prices down approximately 15%. Traders placed an approximately $950 million bet on oil prices falling. When the announcement hit, the Dow Jones Industrial Average ripped 1,325 points higher, its best day since April 2025. The S&P 500 popped 2.51%, and the Nasdaq surged 2.80%. West Texas Intermediate crude tumbled more than 16%, its biggest single-day drop since April 2020. Stocks that had been crushed by the war, airlines, cruise lines, manufacturers, exploded upward. United Airlines surged more than 9.5%. Carnival jumped 10%. Meanwhile, at least 50 newly created Polymarket accounts placed substantial bets that the US and Iran would agree to a ceasefire shortly before Trump announced the deal. The bets were the sole trades made through these accounts. The pattern wasn't new either. It had been building for months. On the Friday before the Iran war began, An unusual surge of more than 150 polymarket accounts placed hundreds of bets predicting a US strike on Iran the next day. In January, a trader turned roughly $32,000 into more than $400,000 by betting on the capture of Venezuela's Nicolás Maduro before it was announced. Last April, a surge of bullish stock trades appeared minutes before Trump announced a dramatic 90-day pause on the Liberation Day tariffs that were roiling the market. Every time Trump was about to turn a dial, someone appeared to be positioned perfectly to profit from the rotation. Nobel Prize-winning economist Paul Krugman called it treason, writing, "We have another word for situations in which people with access to confidential information regarding national security, such as plans to bomb or not to bomb another country, exploit that information for profit." Congressman Richie Torres sent letters to both the SEC and CFTC calling for a formal federal probe, saying the occurrence may constitute one of the largest instances of insider trading in history. In a CNBC interview, he put it bluntly, "What kind of trader would make a massive trade at 6:49 a.m., 15 minutes before a market-moving presidential announcement with billions of dollars at stake and without a hedge? The only plausible answer to that question is an insider trader. Any other alternative is a statistical impossibility." Senators Elizabeth Warren and Sheldon Whitehouse wrote formally to the CFTC chairman, arguing the pattern raises serious questions about whether there has been recurring misappropriation of material non-public government information. And then came the detail that set the internet on fire. The White House Management Office sent a staff-wide email on March 24th, warning that using privileged information is a criminal offense, and that placing wagers using such information for the private benefit of any employee or third party violates federal ethics regulations. The Trump administration has systematically dismantled much of the machinery designed to catch insider trading and white-collar fraud. The Justice Department's Public Integrity Section, created after Watergate to prosecute corrupt officials, was reduced from 36 lawyers to 2. In 2025, the administration cancelled 159 federal enforcement actions against 166 companies. Projects like World Liberty Financial got a lot of attention, with big money coming in and early investors making strong profits. It was founded by Trump's family member and Witkoff family. Steve Witkoff is also serving as USA Special Envoy to the Middle East and seen all the time with Jared Kushner when doing peace negotiations in Qatar, Egypt, Saudi Arabia and Pakistan. The Trump family had profited $1 billion on these tokens by December 2024. Reports say the project generated huge revenue, and early holders benefited the most. Just a system where being early, having access, and good timing can make people a lot of money. And just like in oil markets, the biggest profits usually come before everyone else understands what's going on. We'll explain that story properly another day.